right. Hello, everyone. We are live with our second ever weekly recap.
Hi, everyone.
How's it going, folks?
Let's have everyone introduce themselves.
All right, I can go first. I'm Owen. I'm a reporter with the Defiant. That's what I do every day.
I'm Alex Gilbert. I'm also a reporter at the Defiant, based in New York City.
Ed Robinson, contributing editor based in London.
YYC Trader, your friendly anonymous degen.
Nice.
Okay, so let's get started. Okay, so this week, as always, tons going on in crypto and DeFi. So I guess like the main thing was on the market side, crypto was pretty much shrugging off really bad earnings reports from the big tech stonks, and just continued to rally throughout the week. And then we had tons of other kind of tech and protocol related announcements. Today, zkSync launched. MakerDAO passed a really important vote that has the potential to really impact and change the very way that this big DeFi protocol works. Alex here broke news that Multichain has been transferring user funds around, and it's unclear where those funds went. Near had to unwind its stablecoin USN. In the NFT space, big news with Reddit NFTs really gaining steam. Redditors created 3 million wallets, and volume really spiked this week. Apple added new rules for NFTs, and our artifact had a big drop as well. And then in the regulation front, also, it's becoming common that we're getting more and more news on this front. SBF responded to community backlash, which we reported last week. The UK voted to recognize crypto assets, and Hong Kong is also taking steps to formalize crypto reporting. So why don't we start off with a markets overview? I'll turn it to you, YYC.
All right, so we finally broke out to the upside on Tuesday on the back of better than expected earnings from GM, Coca-Cola, and UPS. I mean, crypto's basically been following the stock markets, right? We've been highly correlated for, well over a year now. And despite some terrible earnings from big tech in the last couple of days, Amazon, Apple, Meta, Google, all of them came in behind expectations, and the Nasdaq took a beating yesterday, but seems to be recovering today. And ETH currently is looking to be approaching the highs hit 2 days ago. So it's at 1560 right now. In terms of Bitcoin, the same thing, still showing strength. It's at 20,700 at the moment, and this is the first time we've seen it sustain trade above 20,000 since the beginning of the month. I think it was October 6th. And it's been layer one tokens have been the best performers this week. They've done really well. We've got Solana, Matic, Polkadot, Algorand, Cardano. All of them have done really well this week, and I think we can look forward to more of the rally continuing, as long as the Fed doesn't do something out of the ordinary next week, because that's the next catalyst that everyone's looking for. Next Wednesday, the Fed is widely expected to increase rates again by 75 basis points. Currently, the probabilities point to almost a 99% chance of that hike. So it's pretty much a given. And each time the Fed has hiked rates, in the past this year, we've seen a sell-off that's been reversed in the following days. So we'll have to see if the pattern repeats itself.
Awesome. Also on markets, we had Owen cover a really interesting story on liquidation spiking in the FTX trading platform. Do you want to go over that?
Sure. So as part of the rally, which YYC talked about, FTX saw, according to CoinGlass, I think it was $1.2 billion of liquidations in 2 days, which is insane. And I reached out to FTX to get confirmation about whether that was true, because it seemed like there was a pretty large discrepancy between FTX's liquidations and the other major centralized exchanges, but they didn't get back to me. But if the data is correct, a lot of people were caught going short going into that rally, and a lot of people were caught off guard. So pretty surprising carnage if that is indeed true. And yeah, as YYC said, we went into a period of very low volatility. I think BVol hit below 25% volatility, which Alex Kruger has said in the past always leads to kind of definitive movements, either up or down, coming out of that kind of consolidation period. So looks like it's going to the upside. So that may be further evidence to YYC's point that we might be heading up for at least the short term. So that was the main gist of the story. I saw one influencer whose name I'm going to botch, but he has the wolf picture, Hasaka, I think it is. But saying like FTX's liquidation engine isn't that transparent. It's not like our decentralized lending protocols like Aave or Maker. Everyone kind of knows when they're going to get liquidated. So it's a little less transparent, but assuming that data is true, a lot of people got caught offside. So be interesting to see where we go from here.
Yeah, and just a reminder that we have great liquidation data on decentralized protocols, which, as Owen was pointing out, is pretty transparent. We're getting all this data on chain. So we have liquidation count and also liquidation volume for these 6 major DeFi lending protocols, so that you can check out in our charting tool on the terminal. So just a reminder that anyone can create these charts to track how what's going on with liquidations in DeFi. And it looks like while in FTX liquidation spike, things have been pretty orderly and quiet on the DeFi front. So that's pretty interesting. I guess, with obviously, ETH being the main source of collateral and it being, having been rallying and increasing this week, liquidations are really low. So let's move to the next big story, which is zkSync, this really promising scaling tool based on ZK rollups, launched today. This was a Sam story, and again, we're very sorry to miss Sam on these weekly recaps. He's based in Australia, so Alex will be taking over the recap of this story.
Yeah, unfortunately, Sam has to sleep, so that's fine though. So with scaling Ethereum, there are 2 routes to do that. One of them is an optimistic rollup, another is a zero knowledge rollup. Optimistic rollups dominate this space right now and have almost all the market share because zero knowledge technology is cutting edge. It's new. So it's a big deal that Matter Labs, the company behind zkSync, zero knowledge sync, is releasing the code for it's claiming the first zero knowledge Ethereum virtual machine. So the first rollup that is so compatible with Ethereum that any developer that wants to port an application from mainnet to zkSync wouldn't have to do a whole lot of work. But it's a little bit controversial. They're calling this the baby alpha. It's not actually available to third parties just yet. And Matter Labs took a little bit of heat from other rollup providers because of this. The CEO of Arbitrum, for example, said that their kind of, I think the phrase used was muddying the waters and pushing other ZK teams to maybe embellish their own achievements in this kind of race to be the first. The timeline right now for zkSync is we've got a baby alpha launching today, so the code is out there. And then next month, they're actually going to open the platform up to ecosystem partners. And then by the end of the year, there's going to be a full alpha where the public, anybody who's interested, can finally have access to the platform itself and can start working and developing on it. Now, amid some of the criticism that they had received, the product lead at Matter Labs basically summed up his response. He had a couple things to say, but to sum it up, he said, and I quote, "Haters are going to hate." So that's about it.
Nice. Yeah, I mean, I think this is going to be an ongoing theme, right? Just this layer 2 race heating up. The space is getting very crowded. It's basically this fight for who is a better scaling solution for Ethereum right now. Optimistic rollups are leading in terms of TVL, and I think CK rollups have held kind of the biggest promise. I think Vitalik has said this is the way to scale, but in the end, it's a more immature technology that's just coming live. So it'll be interesting to see how that develops. Okay, let's turn to our next story. This was a really fun one for us to break. Like I mentioned before, Alex found these questionable practices happening on Multichain, which is the second biggest blockchain bridge by TVL. So Alex, what's going on here?
Sorry, I was muted. Well, I don't want to take all the credit, right? It was the team at L2Beat that first flagged this issue to begin with. And for folks who aren't familiar, L2Beat is a website that you can go to that'll show you the different layer 2 protocols, the rollups, what their total value locked is, the security assumptions that are present in them, and they just put out a new dashboard. So first it was just layer 2s. Now they're also looking at bridges. And something that they noticed while they were doing their research was that Multichain, which is now the third, a couple days ago it was the second.
Oh, maybe your story had something to do with that.
Maybe.
Market moving news.
Yeah.
All right.
Well, at the time, Multichain, the second largest bridging protocol with over $1 billion in total value locked, the number has since dropped to just under $1 billion. That in the summer of 2021 had moved user funds from one of their bridging contracts. And so, when you use a bridge, you place money in escrow, and then wherever you're going, wherever you're bridging to, you're going to get tokens on the other side of that, but your original tokens are still held in that escrow contract. And so the L2Beat team had noticed that some of these funds were moved out, and they had contacted Multichain about this, and Multichain told them that these were used to provide liquidity elsewhere in their network. With some places that you bridge to, you can't just mint new tokens on the other side. You need people to actually leave tokens there for you to pick up. You need liquidity providers. And so they moved those tokens to provide liquidity elsewhere. And the L2Beat team and other folks that I've spoken to say that this is an issue, because assuming that is in fact what Multichain did with those tokens, nobody has dug deep enough to figure out whether that's the case. It would be a lot of work. Assuming that they're doing what they say they're doing with the money, even then, if you needed to pull out real quick, finding where those tokens are, transferring them all the way back to that original escrow contract would take time, and time is money. It could be a costly sequence of events. So I mean, that's really the gist of it. We had reached out to Multichain repeatedly over the past week to get their response to these allegations, to confirm the alleged narrative that they were providing liquidity with these tokens, and never heard back from them. So it'll be, what I'd really like to see is a team that has a lot of time on their hands to really dig into that question and see kind of where that money went and what's going on with it.
Yeah, I think, the big issue here is transparency. Like maybe their users are okay with multi-chain deploying their funds elsewhere to get them better yield. But I think that the main issue is that it's not clear whether that was disclosed. At least, it was nowhere to be found on their website. So it's that issue of users knowing exactly what's happening with their funds, because like Alex said, I mean, in the case of a big sudden market drop where you like users want liquidity right away, that can become a difficult situation if those assets are not kind of readily available. And well, we covered this same story in yesterday's Daily Defiant, our new daily news show. So also, I encourage everyone to go check out our video on this story, and also Multichain. If you're listening, we'd really like your side of the story. We don't like reporting kind of one-sided stories, and we really did try to get kind of your side of what's happening. And then this is a huge story, which I have actually been kind of surprised that it isn't getting more attention. It's MakerDAO token holders just approved this huge change to the protocol, and as probably everyone watching the Defiant knows, Maker is the biggest project protocol in Ethereum DeFi. It's kind of the grandfather of DeFi, I would say. Like it really is what started this ecosystem. It's our decentralized central bank. So whatever happens with Maker, it has a huge impact on the space, not least because it issues DAI, the fourth largest stablecoin by supply. And so it matters how people are voting. So the first thing that to go over is that there was a vote on whether Rune Christensen, that's MakerDAO's founder, whether his roadmap called the endgame plan should be implemented. And this plan is all about making MakerDAO more censorship resistant. And that means removing as much as possible the reliance on centralized assets and any connection to kind of the real world, so that it's less subject to regulation and to third parties and authorities ever being able to affect it, come down on it, crack down, and it can just live in this decentralized world. That's kind of the main gist of what Rune's endgame plan is. And what it implies is that the MakerDAO main DAO dissolves, and it is now run by MetaDAOs, by these kind of individual business units. Part of the plan, which still would need to be voted and agreed by all token holders, would also remove all real world assets to be used as collateral. And what that implies is that DAI would have to lose its one-to-one peg to the dollar. Because the way that DAI is able to maintain its peg is because there's USDC, and there's all these non kind of strictly decentralized assets backing it, and that allows it to scale and to really be able to be redeemable at one-to-one to the dollar. If that's not the case anymore, and there's a limit on real world assets or there's just no real world assets backing DAI, then there's a question on whether DAI would, have to keep its one-to-one peg. To me, that's huge. Like saying that DAI is not pegged at one-to-one with the dollar anymore. It blows my mind that this is being proposed and talked about. I think, confidence that a stablecoin will maintain its peg is pretty much everything. Once you lose that, we've seen how that spirals out of control. Like once the peg is lost a little bit, it's this downward spiral. So yeah, I think it's a very, very bold move and proposal by Rune. And yeah, the endgame plan was approved. The final thing to mention here is that the vote itself was pretty controversial. So it happens that about 74%, well, first of all, only 15% of Maker token holders participated in the vote, which is really low. And then of those, 74% were under the influence of Rune. So either it was like Rune's own tokens or they were Rune's delegates. So this is pretty problematic. Really controversial, huge changes in MakerDAO happening. And then to be clear, it's not like all of these changes happen all at once. It's there's still kind of different phases of approval that need to be voted. But at least this is a big step towards this endgame plan that Rune is proposing. So
yeah, I would just chime in there that I edited this story. I've edited most of Sam Haig's coverage of MakerDAO, what it's going through, and I keep coming back to this sense that what's happening inside this protocol is almost a fight for the soul of DeFi. That they're wrestling. Rune and his colleagues inside, his fellow members inside the DAO they're trying to figure out one of the most fascinating and crucial problems inside DeFi, which is how you balance, this cooperative structure, this very democratic structure, with business efficacy. How do you actually generate more revenue? How do you protect the protocol from regulatory risk? How do you do that in a system that's basically driven by voting, by members? And it's a really interesting problem. And I would wager that many DAOs and many protocols inside the DeFi community are watching very closely to see how Maker deals with these problems, because they're wrestling with similar challenges of their own. It's hard to think of a more important story taking place in DeFi in terms of how it figures out this major strategic issue on how to balance growth with with DeFi values.
Yeah, absolutely. We also had a video on this. When was it? Wednesday or Tuesday? But anyways, it's on our daily Defiant video, so you guys should check it out. I was the presenter of the video. I got a lot of flack for not, I guess, like not reading the script very well. And I hear you guys. I promise I'll get better. But anyways, try to ignore my bad presentation skills, and look at the content.
You can't say that, can we?
All right. Okay. And also a heads up that I will need to drop off. I had some kind of scheduling issues, and yeah, there's a call that I really need to be on, but YYC will lead from there, and you guys will be in capable hands. But anyways, let's go to our next big story, which is Near having to unwind its stablecoin. Speaking of stablecoins.
Nice. So this was also Sam's story, but the headline was that USN was under collateralized by 40 million, which is no small potatoes. And so they decided to unwind it. And it seems like it's been fairly orderly. I mean, they got a grant from the Near Foundation, I believe. And so they're actually going to cover the difference and allow people to redeem their USN for, I believe it was USDT, which is kind of incredible. I mean, we saw what happened with Luna and UST, and that was, the opposite of orderly. So I think it was interesting to me to see that this was handled somewhat responsibly. So that's kind of the main headline. I mean, Near's TVL dropped to 136 million as of the time of writing, and that was from 247 million. So almost like a 50% drop as part of this USN wind down. So also a huge cut for Near, and I'm not sure how much of that had to do with the stablecoin itself or kind of like fear around the Near DeFi ecosystem, but that was obviously noteworthy. And yeah, that's the headline news there. Trying to think of anything else that came out of it. I mean, Near is like one of those kind of, I feel like kind of somewhat off the radar layer ones in that, but I looked up this morning and they raised like I think half a $500 million according to Crunchbase. So they're still a major player in terms of overall. I mean, just in terms of the capital behind them, but the capital behind them is like, I mean, larger than their TVL, which just stands at 127 million according to DeFi Llama. So that's what's going on Near. Also, additional context. I think someone in our Discord just said that another thing I'm going to mess up when I pronounce it, but I think Huboy, the exchange, is also winding down their stablecoin, saying it's better for the ecosystem, the DeFi ecosystem as a whole. I thought that was interesting too, that we're maybe seeing kind of consolidation around certain stablecoins in order to kind of scale this ecosystem and have not so many units of account flying around. Because I mean, a lot of people are trying to win the stablecoin ecosystem game, but it's also, I think it's convenient for DeFi to scale if we have limited solutions. So I wonder if there's kind of gravity happening on the stablecoin level finally, because we've had so many, many of which are not, obviously, as we saw with UST, not very sustainable. So
yeah, great point. Yeah, maybe there's a period of consolidation happening here. And then I'm dropping off now. YYC, you can take the reins from here. And sure. I think, well, the next story is also Owen's. It's Celestia's. So bye, everyone.
See you, Kimmy. All right, keep going.
Yeah, Owen, take it away.
All right, rock and roll. So Celestia, they launched, I believe it was $55 million last week. They announced that, and that kind of put them on my radar. I realized they've been building for a while now. But I interviewed a fair amount of people and wrote a story about how they're thinking about blockchains, which is to break blockchains up into its parts and just cover some of it. So I think what they're, how they're conceiving of blockchains is that there's execution where all the transactions happen. There's settlement, which is kind of the official. These are all kind of like esoteric terms, but that's kind of officially how the tokens end up in different, attached to different smart contracts would be the way I'd explain it. There might be a better way to do that. And then, so Celestia, interestingly, is just covering the third and fourth layers of blockchains as they conceive them, which is consensus and data availability. So basically, that's kind of the how the transactions were ordered and the data itself to give that data to make it available to other applications. So I thought that was very interesting in terms of, and their idea is that you reach further optimization if you kind of break a blockchain up into different parts. And I thought it was interesting that, they raised a mid 8-figure amount on the same week that Aptos, which is a monolithic blockchain. So they're trying to roll all those layers into one. Aptos launched and people were panning them. And it was interesting that Celestia, had a big raise and people didn't really seem to be rolling their eyes. And that kind of made me think like, oh, maybe they've got something going on there. So that's their main idea, is that that the parts are greater than the sum, I guess, in terms of optimizing for just one section of the blockchain. And so from a very high level, that's what it is. And my article kind of goes through the thinking that you can break up different parts of the blockchain and reach higher degrees of optimization. And so I'm super interested to see how they do and how these kind of modular architectures emerge. And I'm not a software developer, but I do know that like there's something called microservices, which kind of took over the general web development scene, I believe. And so I think kind of this idea of breaking things into smaller, more modular parts is maybe representative of a more mature blockchain ecosystem, which is nice because we just keep seeing all these layer ones cycled through and don't really seem to get any farther. And so yeah, I'm interested.
Well, what I like, I really like this story. And Owen, by the way, I think you're on the cusp of being a software developer at this
I'm getting
point.
there.
So
no,
maybe by this time next week.
No, man, the software engineers, if any software engineers are watching this, they're going to be like, come on, man, you're a
No,
poser.
but the thing that I love about this story, and I think it really reflects so well on what the Defiant does, is it's a deep dive into a rather esoteric area of decentralized finance. And we're looking at blockchain design. And what you've done is you've gone in, you've jumped into the rabbit hole, and you've come back with a very accessible but high grade story that will satisfy experts. And I think, novices can come to it as well and get a sense of here's where innovation is happening. And I think investors too. If I was an investor, especially if I was managing client money and I wanted to know what are the hot trends that are coming up with the tech. I mean, we keep forgetting like this is all about tech.
Yeah.
And what's happening there, this story is what money managers call high grade information. Nice. It's intelligence on, oh man, blockchain design. I didn't even know there were two designs. I didn't know what's monolithic, what's modular, what's this. So I think it's, kudos. It's a really smart, valuable story. And it's one that you unearthed as a result of your reporting and your expertise and just your interest in areas of DeFi that frankly would scare me and scare a lot of other people off. I mean, we just run for the hills when we see this stuff. And I just love that.
You're hyping me out,
you kind of jump in and get it and bring it back. So I really like the story a lot.
Thank you.
Oh, come on, Ed. You know you love MEV.
Yeah. Come on, Ed. Ed, you're selling yourself.
You know what? I've made my peace with MEV. I will say that I began from a very please don't bring that near me at all. But that's what we do. We learn, right?
Yep.
And
absolutely.
now you build your own MEV bots at home.
No, I don't do that.
I mean, it's great to see, even though, the bear market has stretched on almost a year now, projects are still building, researching, trying different things,
Indeed.
Like Owen said, it's great to see just not another L1 just recycled with a new name on it, a new badge on it, and a new token for, degens to pump and dump. So
right.
Yeah, it's great to see. And I believe the next story is Owen's as well, where Apple released new rules regarding NFTs connected with apps in its store.
Sure.
So go ahead.
Yeah, I mean, so this one, it's still up in the air to me. I mean, my in terms of how Apple is going to entirely implement its rules, but I think from the highest level, it seems like people are going to be able to buy NFTs and transfer them, but in terms of using them to unlock experiences in the game, they're unable to do so. And the thinking there is that if you're able to use NFTs to do something in a game, you're going to be able to bypass Apple's in-app purchase function, which takes a 30% cut of the of all in-app purchases. So Yeah, I mean, I think I talked to one guy and he just said like the upshot is like, cool, you can buy NFTs. You know, the bad part is you can't really do much with them. And I believe it's the only reference of NFTs in Apple's App Store guidelines. So, you know, again, moving forward, and you know that, you know, the biggest company of the world is taking a look at NFTs. But I think a lot of it will come from, I mean, more clarity around how Apple is specifically thinking will come from once it starts approving apps, because they, you know, have a very centralized procedure. And I think, you know, they hand pick, from my understanding, they like review every app individually, which is obviously not a very kind of crypto forward approach in general. But I mean, Apple's gotten pretty far with that kind of walled garden approach. So we'll see how this goes. I mean, it will be interesting to see. And yeah, I think just a lot of clarity will come as we move forward. But crypto definitely has a mobile, you know, it still feels like a fairly desktop heavy. I might be biasing my own experiences on everyone, but you know, it feels like a fairly desktop heavy experience. So I think crypto is like trying to move forward in gaming, trying to move forward on mobile, and this is part of it. And obviously it's a battle, and Solana's got a phone and they're trying to just do their whole own thing. So we'll see how it all plays out, but kind of slight movement there, recognition of NFTs by Apple. It was interesting. So
yeah, it's interesting because, I mean, the whole point of the metaverse, the open metaverse that we're building, is to kind of take on these Web2 incumbents, right? And say, you know what, 30% is absolutely absurd for you to be taking a cut of everything.
yeah,
You know, that's why NFTs came into being, right? Where creators can, you know, monetize their efforts, you know, get paid in royalties. Of course, now the royalties are kind of up in the air.
yeah.
But that's another story.
Yeah.
But of course, in terms of awareness, I think Apple just taking this step will be a huge boost for NFTs. I mean, a lot of people who had probably never heard of NFTs will come across them now if, like you said, some apps are approved and they're able to like buy and sell collectibles and things like that.
Yeah.
And this actually leads us into the next story, which is Reddit NFTs, right? And these are the same Redditors who a year ago were like, we hate NFTs and, you know, like burn all this stuff down. And now, you know, the avatars are pumping. So it's like, woo, you know, we love it. Bring it. So, Alex, you want to dive into that?
Yeah, and I don't have a whole lot to add to that, but basically, Reddit is letting its users add like profile pictures, like Reddit mascot, the mascot, if you're familiar, the little alien called Snoo. Reddit collaborated with a bunch of independent artists to create a series of, I think it was 40,000 Snoo avatars, and they're all different, and they're NFTs, which is ironic because, you know, Reddit subreddits, the little communities within Reddit were dripping with NFT hate not too long ago, right? So the avatars were selling for between $10 and $100. If you maybe like breezed through the whole process of getting one and like reading what this was all about, you wouldn't realize that these were NFTs or this was related to crypto. Reddit did a good job, I guess you could say, of kind of making these NFTs as normie friendly as possible. It doesn't use the term NFT. It does say that they're backed by blockchain technology, I believe. But I mean, people have loved these things. They launched over the summer. They recently sold out. They're doing a lot of volume on secondary markets. When we had run this story earlier this week, the 24 hours preceding, they accounted for almost 3 million in trading volume, which is just incredible, especially given the fact that the NFT market has otherwise collapsed this year. So I mean, it's a funny bright spot, you know. It's like it shows what can happen when these bigger platforms that already have such a wide user base just kind of weave the technology into what they're already doing. I mean, it really just kind of turbocharges their use, and you know, sometimes without the people who are doing it even realizing.
Yeah, they definitely did a good job of disguising NFTs as what? Digital collectibles, right? One thing I found strange though is that I believe they launched these things back in July, right? And what's been happening for the last 3 months? Like, why have they suddenly 10x'd in the last week? Is it just because crypto Twitter picked up on it and now, you know how degens are. They pile in regardless of price.
Yeah, the mysteries of what happens off Twitter, who knows?
Yeah, yeah, no, that's a really good question. I can't answer it. I don't know. But hey, maybe somebody watching this does. Maybe one of our readers.
It is interesting just that. Yeah, I feel like because crypto is like coming up with names for things as they develop them, and then like sometimes we're just stuck with these names that are are kind of esoteric or just leave a bad taste in people's mouth, depending. And it's I just think about protocols. I did a panel about protocols, and it was like, man, this word, like no one wants to hear that word in the normal world. Like I don't know, which I really like it, but anyways, it's just funny how we come up with these words, and I'm not sure if they're always the best choice. But
yeah, maybe if you just don't call it an NFT, everybody really wants it.
Just call. I don't know. I'm just using a financial
digital
app.
collectible.
Yeah, exactly. I don't know.
Yeah.
We keep it simple. We just call them JPEGs,
Yeah. Fair enough.
All right, and to round out our NFT coverage is the roundup that I published this morning. And the big news this week was basically Artifact, the company behind the CloneX collection that was purchased by Nike. I believe it was almost a year ago now. They launched a new collaboration with Rimowa. I'm not sure if I'm saying that right, but that's a German manufacturer of high-end luggage. And if you travel a lot, you've probably seen these aluminum suitcases in the hands of the flight crew and like executives who are looking like really busy and trying to get to where they're going. And these things retail for a lot. I believe the classic version sells for something like 1,600 US, and they have like, of course, fancier versions that go way above that. Coming back to the drop, it was quite an interesting mechanic actually, because if you wanted to mint one of these, you had to enter a raffle that was conducted virtually in an on-cyberspace. Here's a screenshot of it. So you need to connect your MetaMask wallet and then enter one of these raffles. The one on the right is the one for the actual physical luggage, and the one on the left is there were 2,000 or so of these robot collectibles. These ones on the left right here. So this is so they've done really well in the secondary market. The robots are up about 4x from mint. They were minted for 0.07 ETH, which was about $100 or so to start off. And the suitcases are obviously in different tiers of rarity based on the number that they have. So there are few, like the red ones are the most common, and I believe there are only 7 of the green ones. I don't think they've released details yet on what these colors entail and like what you'd get if you had one of these rare ones. But as it stands now, you'd be able to forge these NFTs and claim the physical luggage, which would be sent to you. And then all the pieces, like all Artifact stuff, have these NFC chips, which will let you link them to your NFT. Again, not sure what purpose that'll serve in the future. If you're traveling with the luggage, I mean, you have the bag, right? But I mean, I'm sure they'll think of something. And you can actually download the 3D versions of these bags, so you can use them in your like metaverse apartment, I guess, if you're like traveling virtually down the road. Who knows, right? So this was on top of the OpenSea leaderboard for the last 24 hours with almost I think it was 1,200 ETH or so in volume. And the second major announcement that we saw yesterday was Art Blocks. I mean, if you've been around in NFTs for a while, like this was one of the stars of 2021's bull run, right? So a lot of these, I mean, it was almost impossible to mint one of these. And we actually did a feature on that, where one of our writers tried to mint one for I think it was 2 or 3 weeks, and it was just impossible to get into because the gas wars, they would sell out literally in minutes. So they're launching these friendship bracelets, which anyone who holds an art block as of 2 days ago can claim 2 of them for free, and the claim period will open on the 3rd of November. So these things look pretty cool, and I believe they also include instructions on how to create physical bracelets using like yarn, I guess. So that's pretty cool. And according to the article, they said that they want to spread the message of generative art to the world, and so they encourage people who claim to keep one and like give one away, to a friend or whatever. So yeah, looking forward to seeing or claiming these. I mean, who doesn't like free NFTs, right? And looking at the market as a whole, really, I mean, it's just very tepid action. I mean, we're barely holding above the 100 million weekly volume mark. And it's been trending lower. I mean, over the summer and continuing into now, it's just been trending lower in terms of volume. Although we did see a small uptick in the number of transactions, about 5%, 361,000 last week. And in terms of floor prices for major collections, as we've seen this happen many times before. Whenever ETH pumps, you see floor prices take a slight dip, because I guess people would rather hold ETH than the NFT, and these are like pretty sizable investments, right? So yeah, it's quite like the pattern continues to repeat itself. And with that, we're going to move on to regulations, which also had a lot of developments this week. So Ed's going to start us off with the UK's move to vote to recognize crypto assets.
Yeah, I'll take UK and Hong Kong at the same time. In fact,
All right.
I'll take, and then SBF as well. They're all kind of a piece. Yeah, the UK, there's been some form of crypto regulation kind of snaking along through Parliament for a decade at this point. And so this week, the House of Commons took a look at a bill that would recognize and regulate crypto assets on a par with other financial instruments. And that's been telegraphed for a long time. What it would mean is simply that there's a registration process. It would be deemed an instrument that is overseen by the Financial Conduct Authority, and crypto asset providers would have to comply with the same types of rules that protect retail investors from unfair practices. So it's not that big a deal. Hong Kong is actually more interesting because it almost looks like officials there are introducing regulation as a way to attract crypto firms, because they seem to be saying, hey, we're going to create rules of the road. Everybody's going to be on the same page. There's not going to be any uncertainty anymore about something going sideways and creating unseen risk. You have to remember, Hong Kong has been through a really difficult period with zero COVID policies and heavy quarantines that have alienated many, many non-Hong Kong residents. There's been an exodus of tech entrepreneurs and investors from Hong Kong, especially to Singapore, as a result of the draconian COVID-19 practices in Hong Kong. And then, of course, there's been enormous political tumult as Beijing has cracked down on free speech and other democratic rights that Hong Kong citizens have grown accustomed to. So, I mean, Hong Kong is just in a really bad place when it comes to attracting business. So it almost looks like the authorities are there saying, hey, everybody come back. It's all going to be cool again. And we're going to set up these regulations not to stop business, but to actually just get everybody on the same page and stoke it. Whether they can pull that off, we don't know. Next week, there's a big fintech conference there. More details from Hong Kong authorities are expected. And then I'll hand this off to Alex. But of course, Sam Bankman-Fried really made a lot of waves last week when he produced essentially a post in which he suggested industry norms that might, again, this is all about getting players on the same page and accepting regulation. And you can imagine how well that went over in the DeFi space. Well, he kind of saw a lot of the criticism that erupted after he suggested that, and Alex covered his reaction to that.
Yeah, I mean, in short, he said that he had been chastened by it. That and you know, to his credit, when he put out his own personal recommendations for how the industry might self-regulate while it waits for lawmakers to do something, he said, you know, this is just, you know, a list of suggestions. Some of this stuff is going to be wrong. Trying to start a discussion, and he succeeded in that. But he also tried to, you know, clarify a couple of the points that he made. You know, one of the primary ones being that this was kind of, these were suggestions for how existing CeFi entities might interface with DeFi under some kind of regulatory regime, right? So you know, he was at pains to stress that decentralized applications should remain decentralized, that they should remain permissionless, that the code should be free for anybody to create and upload and then access it if they've got the know-how. But if you're, you know, an entity that, you know, like, you know, at FTX, that's kind of giving folks the on-ramps to some of this stuff, then the kind of regulatory regime you might exist under would look a little bit different than somebody who is quite technical and knows how to interface directly with, say, Uniswap.
Yeah, I think one of the fascinating subtexts of SBF's move here, if you read between the lines, is he seems to be kind of, you know, suggesting that crypto needs to get ready for regulation, and that this constant crackdown story that keeps emerging. It's like every couple of weeks there's a new headline. The feds are cracking down again. They're doing this, they're doing that, and it's kind of, it's all been understood very much through an enforcement context, you know, where the SEC makes a case or the CFTC makes a case or so forth. And I think, to his credit, I think what he's trying to do is say, hey, we all need to accept that regulation is coming, and that's not necessarily a bad thing. And right away, I think there's a lot in DeFi who will reflexively see that as heresy. And I think SBF, having TradFi roots, is kind of saying, look, I'm DeFi, I get it, but it is going to happen. And so I think there's something very, certainly very newsworthy, but it's also quite productive in at least getting the ball rolling. And I mean, I agree with you, Alex. I just, who knows which way it's going to take, but you know, I think more enlightened minds in DeFi will not demonize SBF for doing this, but will kind of see that what he's kind of sketching out is probably inevitable.
Well, and to your point about regulations not necessarily being a bad thing, we do actually have an example of a kind of regulatory framework that's been released that folks in DeFi who were quick to criticize SBF have applauded, and that's a report that was commissioned by the executive branch of the European Union. This came out last week. I wrote about that as well.
Right.
And the report made a couple of kind of broad suggestions, right? Nothing like really nitty gritty, but a lot of folks that were quick to criticize SBF looked at this report prepared for the EU and said, "Wow, man, Europe,
I know,
way ahead of the US."
I really found your story fascinating on that, because the EU is deeply prescriptive. I mean, the EU, there is no back and forth. They make a decision, you know, an EU-wide law gets passed, it's adopted by all of the nation states, and there's no real dissent from that. I mean, the dissent will be passed. So, I mean, when you look at US businesses in general, not just crypto, but just in general, they hate the EU by and large, because the EU they consider it so burdensome and overbearing. I mean, that's why so much of the UK voted for Brexit, because they wanted to, escape the thumb of the EU. I mean, for better or worse, but it's just fascinating that crypto would respond to an EU regime favorably, because the EU is so much more overbearing and prescriptive than anything you would find in the US. So that's just kind of like a weird paradox.
Yeah, no, and to be clear, this was a report commissioned by the executive branch. It doesn't have any legal bearing. It's not going to be the framework for whatever laws they might pass, but it is expected to be something that they reference, something that they use as they work on those laws. And just reading through the report, I was taken away, because it's like, everything about the tone of it was totally contrary to stuff that we've been getting from the US government over the past year. The report's like, well, one of the tricky things about DeFi is the anonymous nature of using it, but that's not a bug, that's a feature. And it's like, wow, like,
yeah,
like, really?
that's gonna run right into a wall in Brussels, because AML KYC, which is anti-money laundering and know your customer practices, are taken very, very seriously in Brussels, as they are in Washington. And that's the battle that's ultimately looming down the road. I mean, we saw a preview of it with the Tornado Cash episode, but just to circle back to SBF, it'd be fascinating to talk to him and get more detail on what he's thinking, because my reading of his industry norms and so forth is kind of like, we should do this for ourselves first before the government does it for us. And it's not a bad idea. It's got some merit to it.
Yeah, it seems like regulators around the world are like, they can't decide which approach to take, right? And it depends, because most lawmakers are so unfamiliar with crypto and how it works and what it is, and most of them either think it's a scam or Ponzi, like Senator Warren and her friends, or they think it's too dangerous to be used by your average people. If you lose all your money, what are you going to do? You have no recourse, no customer service. That's of course an angle that needs to be worked on. I don't think, for example, I wouldn't want my grandmother to have all her savings on DeFi or in crypto, because I mean, let's face it, if she loses her keys, it's done, right? So
your grandma isn't a degen?
Not yet, but we're working on it though.
All right.
Once it becomes a bit more user friendly, why not?
Yeah.
It'll be interesting to see how it all works out. Like, I was talking to Urine this week, and it's like, they're so punk rock to me, but it's like, they might kind of evolve into kind of financial infrastructure, and it could be that normal people might never even know what Urine is, but be using it on the back end through some other product. So,
but at some point, as these projects mature, what they want is certainty.
Yeah,
that's all they want. They want, like, look, we just need to know the rules of the road, so we can just concentrate on building instead of spending half our week talking to lawyers.
Yeah,
and because it is going to be regulated, that's happening. Whether crypto likes it or not, it's happening. It's just the wheels turn very, very slowly. And the fact that crypto is not systemic, it doesn't pose any kind of systemic risk, means the wheels can turn slowly in Washington. There's no urgency in Treasury. Janet Yellen isn't pulling her hair out saying, like, God, we got to do something about this or it's going to blow up the world. It's not. I mean, Terra blew up in May and nothing happened. It's just, it's not systemic. So for better or worse, lawmakers in Washington and Brussels can take their time in doing this, but it's going to happen.
All right, so that brings us to the end of this week's roundup. Hope everyone enjoyed it, and join us at the same time next week. Give us your feedback in the comments under the video once it's up, once the recording is up. And yeah, it was great talking to everyone and covering everything we did this week.
Cool.
Super.
All right, guys.
Great. Have a great weekend.
See you soon.
Later, y'all.
Great weekend, everyone.
Bye.
Bye.